Welcome back to the Dividend Diplomats YouTube channel. You've got Bert the Herd over there, and you know you're rolling with Lanny. I've got the Vanguard hat. We're ready to talk to you about another dividend stock, one that I know you guys love. You guys have mentioned in the comments many times before, especially when we talk tech. So therefore, we're doing tech and dividends today.
It's a perfect combination. But before we do, please hit the subscribe button, subscribe to our channel, give us a thumbs up on the video. Everyone, thank you for your support. What's crazy about this tech stock, they just juiced up their dividend too. So we cannot wait to talk about a company in the tech sector that is growing their dividend at a pretty high clip. So get ready, everybody, and get excited.
For those that don't know by now, you know, Bert and I love dividend stocks. We invest in positions each and every week. And also what we do is we look for those undervalued dividend stocks, not just for us, but also for you. We're here for you to help bring you the numbers, run you through fundamental dividend stock analyses here on this channel.
It's all about the people. It's all about the people.
Bert, what's that saying you always say? Time to give the people what they want, or what is it?
Give the people what they want. That's all you got to do. That's what we're here for. But hopefully, as you guys have seen over the year too, we do put our money where our mouths are too. We're giving the people what they want, but we're also looking for ourselves for undervalued dividend stocks. And if there's one we like, we're going to buy as well. That's what it is. We're doing research so that everybody can get themselves closer to financial freedom, ourselves and all of you included.
No, exactly. And, you know, we talk about small companies, local regional banks. We even go up to, you know, the big dividend stocks, you know, again, such as your Johnson and Johnson, your Pfizer's, et cetera, et cetera. We talk about dividend stocks across the spectrum. But today we are talking about a beast of a company in general. We're talking about a company whose market cap is over $2 trillion.
So which regional community bank are we talking about here?
We're talking about the one across the street, right, Bert?
Yeah, the one branch community bank.
Yeah. No, we're not talking about banks. We're talking about technology today. We're talking about the now, the yesterday, the future. This company is just on a straight tear, up over 35+% year to date. Bert, let's give the people what they want. What dividend stock are we here to talk about today?
Microsoft, ticker symbol MSFT. Sure, all of you figured that out as we were teasing this company and getting ready for it to go. But we've talked about some of your higher yielding dividend growth stocks too. We've talked about your Intels, your Cisco's in the past. Now it's time to veer into the lower dividend yield, higher dividend growth rate tech stock. So we are pumped up today to talk to you about Microsoft and see, is it an undervalued dividend stock to buy at its current prices?
You know, in the last 5 years, Microsoft's stock price is up over 400+%. Literally September of 2016, Microsoft was trading at a good old $57 per share. And as of this video filmed on September 17th, Microsoft is trading at just a hair below $300 per share at $299.87.
Absolute insanity. But Microsoft has done a lot to grow their value and earn that increased stock price. They continue to build, improve the Microsoft suite. They're getting ready to roll out here Microsoft Office 11, which I'm sure everybody's excited about. They've integrated Teams now to compete with all of your current video chat. And whether you like Microsoft products or not, whether you think, they're just average or above average, they're not the great ones like some of the competitors, you have to admit, from individual users to large corporations everywhere, you need Microsoft in your ecosystem to operate and function as a business. That is why they are so successful and have earned a $2 trillion market cap.
You know, when you think of Microsoft, obviously you have the whole 365 package, the Microsoft Office suite. Bert mentioned Teams, the pandemic ready, well-timed release of that product, really to rope everything in and really kind of get those businesses and customers in a very spider web of services, not to mention their cloud-based software and platforms and storage. They also own LinkedIn, as well as the video game system. Bert, what's that game system?
Xbox, which also benefited from the pandemic too. So yeah, they've grown out. They are not just a Microsoft Office shop here, and that's been the beauty of it. They've been crushing it from the cloud. They are competing head to head with Amazon and winning some of these major contracts too. They truly are firing on all cylinders, as it should be for a company that has a $2 trillion plus market cap. You would hope that they are firing on all cylinders, and we're not saying, oh no, growth is stagnant everywhere and they aren't doing anything.
What really caught my eye and Bird's eye, and why we want to talk about Microsoft stock right now as a dividend stock. And we'll talk about it when we go over the Dividend Diplomats Stock Screener for Microsoft. But they just recently released a nice 10.7% dividend increase for you, the shareholders.
But that wasn't the only thing in the announcement. They authorized up to $60 billion of share repurchases as well. So the management is putting their cash to work. Obviously, we love the dividend increases because that's a recurring increase in benefit to shareholders because your quarterly annual dividend grows. But we're also not going to complain when there's a share buyback too that's going to cause the stock price to jump up, lower that share count, increase the EPS, and then drop down that payout ratio further. Who can complain about that?
Exactly. It's all about the overall return to shareholders, and those are some great benefits about that share buyback program. And again, Bert just said not 10, not 20, but $60 billion share buyback plan.
Mm-hmm. But before we also jump into the stock screener, let's just do a quick hitters of some of the other major news that they had from their last earnings release that have been causing the stock price to jump up accordingly.
Yeah, you're right, Bert. Yeah, give us the quick hitters about how well Microsoft is doing, why their stock price is still surging based on that last earnings release.
Quarter over quarter revenue growth was up 21%. I'm sorry, everyone. I have the stats on a second screen over here, so that's where my eyes are right now. Net income was up over 16.5 billion, a 47% quarter over quarter increase. Their revenue this year is already crushing last year. It's at 168 billion versus 143 billion last year. And I mean, I know we just talked about how they authorized 60 billion in share buybacks to use their cash. That's not even going to cover half of their outstanding cash and short-term assets. Their cash and short-term assets are at $130 billion.
Liquid, baby, liquid.
Yeah, I would say so right there. And also they continue to pay down their debt as well with that. Their debt is down $9 billion from the previous year. So is there anything I missed from our quick fact sheet? Anything else you want to cover before we go into our stock screener?
No, that paying down again, think about this. They're so liquid. Revenue and profits are soaring right now. That long-term debt pay down of $9 billion, I think, was almost close to 20% of their long-term debt being paid down in the course of a year. On a cash flow standpoint, they had over 76 plus billion dollars in operating cash flow. And kind of when you break down the segments, the one thing that really stood out to me was that they stated LinkedIn's revenue was up a blistering 46%, which is just, again, these numbers almost aren't even like true. Like it just doesn't even, it's like I can't even fathom.
It's funny money for this point for Microsoft.
Yeah. Microsoft's just got funny money here. I mean, when your revenue goes up on a top line basis from $143 billion to $168 billion, you're still on a high growth phase, but yet they're paying a great dividend.
Mm-hmm. So everyone, they're crushing it. Let's move into the metrics though, because we want to see, is Microsoft undervalued here? Let's run them through the stock screener. The three metrics are PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing your dividend, and then lastly, we found that fourth bonus metric, the dividend yield. Lanny, let's kick this off here.
All right, so to go in the price to earnings ratio for Microsoft, grip your seat. To keep in mind, though, that the S&P 500 is trading at 34.6 times current earnings. So Microsoft, again, as of Friday, September 17th, trading at $299.87, with analyst expectations right now of $8.80 in earnings. That price to earnings ratio is 34.08 times forward earnings. So just a hair below that S&P 500, definitely on the higher side, but historically, lately, they've been trading at that higher earnings multiple. So, Bert, what do you think about that?
Still at a discount to the market. I'm kidding. They're expensive, but you could also say they're expensive for a reason, because look at all those numbers that we were quoting about there when we were going through it. If you're going to trade at a premium, you better crush it. That's my feeling about it.
That's Bert. That's all you got to say about that. So that was the price to earnings ratio. And I have to kick this back to Bert for that second dividend metric, that payout ratio. Bert, let me hear it from you.
With that increase of 10.7%, their new annual dividend is $2.48. Divide that by the 880 earnings, that gives you a payout ratio of 28.18%. Pretty cheap, pretty low on the payout ratio. It's below our perfect payout ratio range of 40 to 60%. So clearly there's plenty of room to continue growing your pay dividend in the future.
So Bert, yeah, why else does that 28% payout ratio make a lot of sense for Microsoft?
Yeah, no, it makes sense because to continue in a tech sector, in a tech heavy industry here, you need to put a lot of cash to work as well. So they can move a lot of that $130 billion of cash into the business operations earnings. They may need to announce a major acquisition to keep up with the likes of your Salesforce that keep trying to come for them, for Google, whatever shenanigans they're getting into. So they do need to keep the powder dry, so they can't give you a high payout ratio. So you need to keep it low because of the sector they operate in.
Exactly. That high growth model. I mean, again, but they're still giving back at least 28% of their earnings back to you, the shareholders. And as Bert said, plenty of safety and plenty of room for future dividend growth. So to get into that third dividend metric, as us dividend growth investors love, is that dividend growth history and the rate. So Microsoft has been increasing their dividend now. It feels like they haven't really been doing it for this long, but over 15 plus years at a solid rate of 9.24%. So pretty much a double-digit growth rate to their dividend. And they've been doing that, consistently. You could just tell by this previous release of 10.7% to that dividend.
Yeah, so 10.7 is a large dividend increase. We're not going to doubt that. But it's nice to see that that's just in line with their history, that they're not just swinging for the fences this year at the sacrifice of previous years here. It's just a nice, even almost 10% every year. What could you not love about that?
Yeah, I mean, very solid. And, Bert, I don't know if you wanted to round us off with that bonus metric that we like to talk about, since they're going through and cruising through these metrics here. Again, the price to earnings is probably on the higher side right now that we usually see and evaluate. But what's that bonus metric, that dividend yield look like, my man?
The price to earnings ratio is on the higher end. The dividend yield is on the lower end here. Their current dividend yield is 0.83%. So less than 1%, less than the S&P 500 here. So interesting, but not surprised by it. At all.
I mean, one could argue like, hey, if you want to invest into a high growth stock that also pays a dividend that's better than that high yield savings account at Ally, Capital One, Goldman Sachs, Marcus, when you're getting your 0.5%, you might be able to move that into here and get 0.83% with growth and appreciation potential and increases to that dividend going forward.
Yep. So just to summarize the metrics here, PE ratio 34.08, payout ratio 28.18%, 5-year dividend growth rate of 9.24%, with 15 plus consecutive years of increasing your dividend, along with a 0.83% yield. What are your thoughts here, Lanny?
Tell you what, it's a great company, and dang it, I'm shooting myself, because I remember, again, 5+ years ago, I'm like, do I buy Microsoft? Are they really going to survive against Google, Amazon, Apple? I kept having that on my mind, kind of what are they going to do to really keep improving themselves, re-engineering themselves? And dang it, they did. And I missed that train. But, again, at under $300 per share, if you really like Microsoft, believe in Microsoft, want a high growth tech position with that great dividend growth rate and yield, might not be a bad idea to own a couple shares.
Yeah, Couldn't agree more with that. I'm not going to be running to buy Microsoft. It's the PE is a little high for me right now, and the dividend yield's a little too low. I'm going to keep building my positions in AbbVie and some of the other companies we've talked about on our channel over the last few weeks and months. But if there ever is a pull down in a company like a Microsoft, I'll be running to grab some. So it's interesting. It's always great to keep up with companies that you may or may not be running to buy today, because it's always good to do the research up front so that when there is a quick flash sale on the market, you know how to act and you know where you want to redirect your capital.
Exactly. So you, the viewers, let us know in the comments if you own Microsoft stock, how long you've owned them. Are you buying them this year in 2021 when Microsoft is trading at near $300 per share? Please leave your feedback in the comments below. Bert, any feedback from you?
Nope. Subscribe to our channel. Give this video a thumbs up if you haven't already. Thank you, everybody. We appreciate it. Let's send us off, Laney.
That was Bert the Hurt and Laney from the Dividend Diplomats. Over and out.